It feels like everybody nowadays is talking about buying gold. Gold prices hit new record highs in 2024, and in just the last 12 months, gold prices have shot up by around 15%, and over the last 5 years, gold prices are up around 80%. And the craziest part of all of this is America is becoming more like India, because back in the day in India, you'd have ladies that used to go out to the jewelry stores and come out with all this gold that they want to buy. Nowadays, you have your mom, your sister, and your cousins going to Costco buying their groceries, coming out with a bar of gold as well. But I want you to be smart here, because the big sales pitch to entice people to buy gold is the world is going to end, the market's going to crash, we had this de-dollarization, the dollar's going to collapse, and the only way you can protect yourself and your family is by buying some precious metals like gold. Now, just for full transparency, I have been purchasing a little bit of gold every single month for a number of years now, before it was cool to purchase gold. But what I want to do today is talk about really, if you're thinking about buying gold or if you already own gold, I want you to understand and look about it the right way, which is what I want to talk about today. So let me get my whiteboard. And the best way to lay the foundation is just to look at how the prices of things, including gold, have changed in price over the last 50 or so years. Back in the year 1970, the median household income in America was around $8,700. Fast forward to 2023, the median household income in America grew to $74,000. Now, let's take a look at home prices. In 1970, the median home sold for $23,000, but in 2023, the median home sold for $412,000. The Dow Jones in 1970 was hovering around the 5,000 point mark, and by 2023, the Dow Jones was hovering around the 35,000 point mark. But this is the real kicker. An ounce of physical gold in 1970 was selling for around $40 US, and by 2023, it was selling in the range of $1,940. Now, of course, it's a range because 2023 isn't just one day, it's a whole year. But now what's even more interesting is if you take a look at the percentage increase of all these things over the last 50 or so years. Household income has grown by around 870%. The median home price has grown by around 1,700%. The Dow Jones has grown by around 600%. And the price of gold has grown by around 4,800% over the same time period. And what this shows us is that household income is not growing as fast as home prices, and household income is growing nowhere near as fast as the price of gold relative to the dollar, because now it takes more dollars to go out and purchase that gold. But there's one little part to the story that most people will never tell you, because most people will highlight, oh my God, take a look at this gold boom. We're talking about almost a 5,000% increase in the price of gold in the last some decades. But the prices of gold has been very volatile over the last 5 decades. Take a look. Gold prices began to skyrocket in the early 1970s into the 1980s, and then we saw this massive gold price crash where gold prices were crashing until they finally bottomed out around 2001, and then they've been kind of steadily rising ever since. I invest my money into 5 places. I invest my money into my own business, Briefs Media. I invest my money into real estate, rental properties. I invest my money into stocks. I invest my money into speculative assets. These are things like startups that I invest in. These are things like cryptocurrency. And then I invest my money into physical gold. Now, this physical gold that I purchase is not like my other investments where I am looking for these investments to go out and produce value. The gold that I invest in is kind of just there as doomsday insurance. It's a little bit of my portfolio. It's a 2% piece of my portfolio, because for me, that's an alternative way for me to save money. If I was to go out and save $10,000 worth of cash and then $10,000 worth of physical gold today, my theory is that if I buried both of these things, I buried the cash and I buried the gold in my backyard, 10 years from now, I believe that that gold is going to have more buying power than the $10,000 worth of cash because of what's happening with inflation. But I don't look at gold as my investment. I don't look at gold as something that I'm monitoring the price of. I don't really care what's happening with the price of gold. I just buy a little bit of gold every month on autopilot, and I own a little bit more of this physical gold, but that's really it. And this is where now what I want to do is kind of break down some things that you need to understand if you've been thinking about buying gold. And I also want to let you know, on a little bit of an aside, that on May 21st at 8 p.m. Eastern Time, I'm hosting a live, free, and virtual stock market mastery workshop where I'm going to be going over my own stock market investing strategy in 2024, because obviously 2024 is a little bit of a crazier year. We're seeing the economy slow down. We're seeing inflation still hot. We're still seeing higher interest rates. How should you think about investing your money in the stock market this year? How can you find more opportunities? I'll be going over all of my own strategies of how to invest into passive investments and how do I look for undervalued stocks. This is a completely free workshop and it's live, so yes, you'll be able to ask me questions. All you have to do is register, and if you'd like to join me on this workshop, I got the link for you down in the description below. Now, if you've been thinking about buying gold, a couple things that I want you to remember is why you are purchasing this physical gold. And there's a lot of confusion here because I hear a lot of people going out and buying gold nowadays thinking that this gold is going to make them rich. But the reason people purchase gold isn't so they can become rich, it's so now you have some sort of way to save or store your wealth. Gold is a store of wealth. It's a better store of wealth than the dollar because our dollar is losing value. And this really accelerated after the early 1970s because in 1971, the United States dollar was taken off of the gold standard. Prior to 1971, if the government and the Federal Reserve Bank wanted to spend and print money they didn't have, it was kind of difficult because they needed more wealth, in this case physical gold, in order to go out and spend money that you didn't have. Well, that didn't last because in 1971, President Richard Nixon took the United States dollar off of the gold standard, which meant the United States government had essentially infinite spending ability, and the Federal Reserve Bank had the ability to essentially print infinite amounts of money. Now, what that did is it made our money essentially paper. It just made it a currency because before that, our money was backed by physical gold. We needed more gold to print more dollars. After 1971, we didn't. We could print infinite amounts of dollars, which then created more inflation. Now, what is inflation? Inflation is when you inflate the monetary supply. It's when you have more dollars out there. Most people assume that inflation is when the prices of things are rising, but that's not true. Inflation is when the value of your dollar is dropping, which in turn causes the price of things to rise. So, when we've seen the prices of things rise over the last number of decades and over the last few years, this is because the value of the dollar is dropping, and this is directly due to the money printing and spending of money that we don't have. I mean, if you just keep printing more and more money, the value of each individual dollar goes down, causing the price of things to go up. And so now you can print more dollars, but you can't print more physical gold, which is why gold generally is a better store of wealth than paper. Now, I am not a financial advisor. I can't tell you what to do with your money because I'm just a random guy on YouTube, and I want you to understand that. But understanding now, when people think about purchasing gold, the goal here is to own a better store of wealth. However, just like every other asset class, gold has volatility too. You saw after the 1980s, there was a massive crash in gold prices that lasted decades. And so you have to understand that gold prices don't always go up. There are factors that can make gold prices go down as well. But over the long term, if there is more inflation, then that would generally make the price of gold more expensive relative to the United States dollar because you can print more dollars, but you can't print more gold. Secondly, it is a type of doomsday insurance. This is the way that I look at gold as well, that it's a small piece of my portfolio because if everything were to go wrong, the dollar were to collapse and everything goes wrong, well, it's a type of insurance because gold has been a type of currency since before you and I were alive. Gold has been used in transactions for centuries now, and people know how to value gold, whether you're in America, whether you're in India, whether you're in China, whether you're in Mexico. People around the world know how to value gold. And so because of that, gold has that type of value. But I don't want you to go out and purchase gold thinking this is going to be a way for you to get rich. Because remember, gold isn't producing any value. I mean, if you have gold and you're selling it to a jeweler, then sure, they're using it to go out and produce something. Or if you're giving it to some sort of company that's using it in electronics, then sure, it's producing value then. But otherwise, gold is just sitting there in a vault looking back at you. It's not producing value. Like if you go out and invest in a rental property, that's producing value because now that's giving somebody a place to live. It's giving a business an office. So you're producing value, and if you can increase the value of the rental property, you can also increase how much rent you can get. Likewise, if you go out and you invest in a company or you start a company, this company is working to produce a product. It's working to increase its value by selling more products to consumers. And so that's working to increase its value versus your gold is just sitting there. So I want you to think of your gold more as a way to save hard money than it is a way to get rich quick. Because when I think about buying gold, I don't even really monitor the prices of gold. It's just an automatic purchase for me that happens by itself, and it's on autopilot. Now, the natural next question that everybody's gonna have at this point is, okay, Jaspreet, well, if I was thinking about buying gold, how can I go out and invest in gold? Like, do I have to go to Costco to buy a gold bar, or do I go to a jewelry store? How do I go and actually purchase gold? And you gotta understand that there are a few different ways that you can get exposure to gold. Number one is you can invest in gold stocks on the stock market. Number two is you can invest in gold certificate. And number three is you can actually purchase physical gold. Now, what I do is I purchase physical gold. There are some platforms out there that are allowing you to set up an automatic purchase of physical gold, and every time you purchase a physical gold bar, they will ship you out a physical gold bar. So it's an alternative way, I guess, for you to not go to Costco and purchase the gold bar. You can just buy it in smaller pieces. But there are a lot of ways to get exposure. One way is you can go out and invest in gold stocks. Now what you're doing is you're investing in a company that's going out and mining gold. So I guess it's an indirect way for you to go out and purchase gold. It's not something that I do, but some people do that. But you have to understand now you're investing in a company. So you also have to take a look at the financials of the company. You have to look at the executive structure of the company. You have to look at the different things the company is doing. So If you are interested in investing in stocks, do you like the idea of investing in gold stocks? That's something that you can consider. The second option that you can consider is you can invest in gold certificates. There are funds out there, ETFs, index funds that are focused on giving you exposure to physical gold. So now instead of you going out and investing and owning the gold, you're owning a certificate that says you're getting exposure to that physical gold. Again, it's an alternative way for you to own gold, and it's a little bit easier because now you don't have to manage the physical gold yourself, but you don't actually own any physical gold. It's kind of like owning a Bitcoin ETF versus owning the actual Bitcoin. When you own the actual Bitcoin, you own the actual thing. When you own the ETF, you own exposure to that thing. I would rather own the physical thing, which is why I like owning the physical gold myself. Now, of course, when you own physical gold, you got to store it. You got to keep it somewhere. You could keep it under your mattress, but then somebody could break into your house and steal that. So you got to find a place to store it. You can use a bank vault, you can use a private vault. There are a lot of places where you can look out now for ways for you to store the physical gold. Yes, it is an added cost. Yes, it is added work, but now what you have to decide is, again, what is your purpose for using it? You're not going to sit here and try to transact with the gold, at least I don't think, every single day. So if you're not going to be transacting with the gold, it's just something that you're going to be storing somewhere as a way for you to keep this now hard money somewhere safe. That way, if you ever needed it, you can go out and access it. Now, I know there's a lot of people that are worried about where you keep your gold because they're worried that the world is going to collapse, the whole world is going to end, and they say, well, if you keep this gold in a physical bank, then the banks are going to collapse and they're going to get you over here from gold. And yeah, I mean, this is possible, but you also have to understand now, what is the likelihood of these things? And at the end of the day, I personally am a believer in the American economy. I believe the American economy is the strongest economy in the world. I believe that the American economy is going to continue to be the strongest economy in the world. Yes, I believe we have issues. We have issues on inflation. We have issues in the economy. We have a lot of issues in our economy. But I still think that we are the strongest economy in the world. We are the most competitive economy in the world. And I think we're going to continue doing that. So where would I want to invest my money? I'd want to invest my money in America. However, I also want to have some insurance. I want to have some protection just in case, and that's why I own a little bit of gold. The bulk of my investments are into value producing assets, primarily that are producing cash flow, real estate, stocks, my own business. That's where the bulk of my investments are because I believe in the future of what this country has and the future of our economy. But I also understand that inflation is a concern, and I understand that there's an alternative way for me to save money. So as you're thinking about now, if you're thinking about owning gold, I want you to go about it the right way and not be one of those people that are sold into this idea of purchasing gold just because everybody is telling you that the dollar is going to collapse, the economy is going to collapse, the whole market's going to collapse. And the only way that you can save your money is by transferring all of your money, your life savings into physical gold. You got to sell your stocks and buy gold. That's not something that I'm doing. When Spotify comes out and they announce that they're going to raise prices for their services for the millionth time, what happens? Well, naturally, it makes their customers very angry because now I have to pay more money to listen to stuff on Spotify. But on the other end of that same coin, that very same news is making somebody very rich. You can see how this triggers people.